Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. So in today's video, we will do a special session on basics of the stock market for all the people who are watching my videos and who do not understand how to interpret the data which I am sharing, which is the most it's a very valuable knowledge which you can get because you have to pay a lot of money to a lot of trainers to acquire this kind of knowledge. So in today's video, first we will analyze Banknifty on multiple time frames. Then we will cover the basics of the stock market and try to explain you in layman language what I'm trying to tell you, like how to read the price on the charts. So without wasting further time, let's get started. I am already on Banknifty 3-minute time frame chart, which you can see here. Let's go to a monthly time frame. So on a monthly time frame, now let me just open up my tool, Epic Pen. Okay, so here we are on a monthly time frame. So this is the candle for this month. As you can see, this was an entry for us. This was a good location for us to enter into this trade with this lowest of the stop loss. And then there's one more point where you could have added your trade, which is your red bar ignored setup, and then you could have got this right here. Also the market tried to go down, but it failed. Now it is moving higher and higher because there is no bad news as such. All the bad news has been factored and market is expecting only for the good news to follow. So that is on a monthly time frame what we can see on Bank Nifty. And now coming to a weekly time frame, weekly you can see that this was a good entry point if anybody wanted to buy. This was break of this high of these two narrowed candles would have been entry, and your stop loss would have been here for a weekly trend. So now the market shows strength, and this is the way location where it got rejected in the past. RSI is also 60, which is a good showing the strength of the market. So now on a daily time frame, if you see on a daily time frame, we are getting narrow range candles like this. After a big breakout, this was buying, this was buying. The narrow range candles, again narrow range candles, again buying came. Now again narrow range candles, maybe buying can happen. So watch on this and what kind of strategies you can deploy. These kind of narrow range candles can be covered by deploying a strategy which can be calendar spreads, which you can do so that you can capture this narrow range theta decay and then go trending with our butterfly strategies, which can be upside or downside. So market is more or less bullish, guys. So I don't see any news coming in which can impact the market right now. If global markets perform well, our market is also perform. So now we should stop factoring the corona news and focus on the overall global trend. So this is about the market, and I have prepared a small presentation for you guys to understand which are the markets which are the dominating markets in the world. So for surprisingly, our equity market is the smallest of all the markets in the world. Okay, this is traded only limited period of time from like 9:15 to 3 o'clock. And then you have commodity market, which is traded from morning 9 till 11:50 in the night, 11:50 or 11:30. It keeps changing. So this is the market which is there now. And then third and the biggest market in the world is the currency market. Okay, so this is the market which is open 24/7. So if you have acquired the skill, you can make money 24/7. But if you don't have the skill, then you can lose the money 24/7 by entering this market. So this is the overall market perspective, and let me show you how is the overall stock market divided. So we have, when we say stock market, what are the things it has? It has equity, it has derivative. So derivatives are out of the equity. So major underlying is equity. For example, HDFC Bank is a stock which is listed. Okay, now it is there in a stock format, which is equity format. It is also there in futures format. It is also there in options format. So these are derivatives made of the overall underlying. Okay, so then we have stocks, and these stocks are listed into NSE and BSE. These are all exchanges. So these are all exchanges which are holding and doing all these transactions. All the brokers are now connected to this exchange to give you a desktop or a laptop software or a mobile software to trade. You cannot directly trade with the exchange. There is always a broker in between. There is a broker in between who is interfacing with you and trading on behalf of you to the exchange. So everything has its merits and demerits. Equity, you can control the quantity. You can trade as low as 1 share or 2 share or 100 shares. You can do, and the profits will also be like that. Profit and losses. When you enter futures market is always driven by lot size. Each stock will have a lot size of say 1000, 2000 or 1500 or 4000. The lower the price of the stock, the bigger the lot size. Lot size means these many shares have to be shared and traded if you have to buy one quantity of future. One quantity, they usually call it lot, is equal to like 1000 shares or 4000 shares. That is the reason you see a higher profit even if it moves like 1 rupee or 2 rupee. Same thing, but in a different packaging. It's options market where every future will have a different strike price, and each strike price will have a premium. So like if you can see, I'll show it to you on NSE side, NSE option chain. For example, let's take any stock. For example, Apollo Hospital is a stock which you are taking. The Apollo stock can go from current 3150 price to 2100 price. So these are all strike prices which are like 50.7. Current price is at 3150. If it goes below 3100, 50 point difference, you have multiple strikes. That means here you are making a decision like if Apollo goes to 3350, I am buying it today at 59. Today at 59 rupees to 3350 call, so that when Apollo comes to 3350, I am buying it at a discount price. So this is the logic which is there. This is how option premiums are calculated. So if it moves like 150, 200 points, so this is 200 point gain which you are going to get on this premium. But if you want to understand this in a layman's language, think it like a stock which you are buying at a 59 price. If the price moves to 3350, you can put an order to buy the stock which you have already bought it for 59 rupees. You will pay the actual money. So it is little complicated, but don't get confused. Treat it like a stock, and you take the strike price as a stock. For example, take the strike 3350 is you're buying at 59. If it moves 10 rupees, you will gain profit. If it goes down, you will make a loss. Simple logic you need to apply, not to complicate it too much. Okay. So this is a very options is a very difficult, complicated subject which I will explain you in other videos. For the moment, we understand the normal ideology behind this options. So now coming to the third point, what are the tools do we need to understand market? So we need technical analysis, we need fundamental analysis. And what are the things in technical analysis? We have chart readings, and there are multiple charts like line, bar, candlestick, Hagen sheet, and there are various charts, but always try to go with candlestick star and you can go on multiple time frames, 3 minutes, 5 minutes, 15 minutes for intraday, 15 minutes daily, weekly, monthly for swing trading and positional trading. These are the time frames we should. Price is the key for understanding the market. You have to understand the price movement, how it is happening. Fundamental analysis will help you to understand what is the fair value of the stock. So this is also a different subject which I will today. The stock price is about 200 rupees. So is it the correct price of the stock is what we will learn in that video which I will make. I will tell you how to find out the fair value of a stock. Now coming to the point number 4, which is our concepts of making money. How will you make money in market? Either by buying low and selling higher, which is called as long position, or selling higher and buying low, which is called as short position. Most of the people do not know this. They always feel that I should have a stock to sell, only then I'll make money. No. In intraday trading or even in the futures market, you can also sell stocks which are not there in your account right now. Yes, you heard it right. If you don't have the stock also, you can sell it, because the broker which you are using will compensate for your stocks, and at intraday 310 he will square out the position and you can book your profits. Okay, for example, if you see any stock which is weak, it is going down, you short it in the morning, say around 700 rupees. It goes down, by the end of the day it becomes 650. You square out 50 rupees profit. You can book and exit. Okay, so like this, even if you don't have the stock, you can do that. So most of the people don't understand it. Even initially I had trouble understanding it, but don't try to complicate it. Just try to understand that whether you buy at 650, sell at 750 profit, you sell at 700 and buy at 650, it's 750 rupees profit. So your broker will make the adjustments. He will show it as bought at 650 and 700, and then he will give you back 50 rupees profit. So you don't have to complicate it much here. What are the kinds of trading we are talking about? Intraday trading, swing trading, positional trading. So intraday trading is only, you should use MIS order so that it gets squared off in the same day. If you have to use a swing trading, use a normal order or a CNC order so that you can carry it for days or weeks. If you are using positional trading, you have to do normal order only or CNC order, which you can carry it for weeks or months. Now coming to our 4th point, what are the candlesticks we should follow in the market? And it is a very simple thing which I am trying to explain. Okay, so now let's go to the candlestick patterns and try to understand which are the patterns we should look out for when we are trading. I'll tell you step by step. So just for everybody's understanding, this is a bullish bar, green bar, and this is a bearish bar. And why do we say that? The price has opened here at 100 rupees. Okay, and it closed around 120 rupees. Okay, so this was a bullish movement. Price went from low to high and it closed at 120. So this is open, this is close. If we have a wick higher here, we call it high, we call it low. Okay, so this is the reason the color will be green for these candles when it opens low and closes higher. Similarly, reverse, if the price opens here, closes here, has a wick here, low and high will not change, it is the same, but open and close will change, which defines the color of this bar. So here price opened at 100 and it closed at 80, assuming. So it was a bearish bar. So this concept is very simple to understand, and you can look at the chart, you can say that price moved up or price moved down looking at the candle color. It's very simple to understand. So now, which are the candles which we should look out for to make a bullish or a bearish trade? I will tell you the location also later, which location you should find out. So here If the bar opens, say it opened here, it went down till here, and from there is a lot of buying which has come, and it closed here, right? So this was the low, this was the high. Open, high are same. Okay, so here in this it shows the strength of the bulls. The color can be red, color can be green also, doesn't matter, but it shows the strength that bulls are winning here. Similarly, in the opposite direction, if price opened here, went high till here, closed here, and open and low are same. Here bears are winning because they were able to sell from this price and then they closed here. So this is a bearish move. So bull candle and bear candle. So these are called as bottoming tail bars. There's a tail which came from bottom and topping tail bar. The bar or a topping tail from the top. So these two candlestick patterns which are very important. Okay, I will now take you to the charts and try to explain to you where to look out for these things. And before that, I will also tell you what are the things we need to use. Tools on chart. First thing we use is simple moving average 20, simple moving average 200. Then we have super trend 14 2. Okay, this is what you require, nothing else. And if you want, you can also add a simple moving average 8. Okay, these are the tools which we need. So now if we go to any chart, say for example, we will go to this and try to plot all these things. We'll say steady, add steady, we'll say moving average, simple moving average, we'll add 8 first, then we add 20, then we add 200. Okay, so we have got 3 moving averages here which are available for us. Okay, so now what is the significance of each of these moving averages? 8 moving average 8 is the closest one, which is here. So this gives you the trend. If you want to use it as a trailing stop loss, you can use it. 8 and 20 gives you the trend of the market, and 200 gives you the resistance of the market. So this is what you have to see. So when we are trading, what do we look for? We look for anything which is forming on a strong location. Okay, location is very important. Like we have too many of this. Okay, so now we need to find the location. So if the stock is about 200, about 20, okay, then we look out for buy opportunities. If the stock is below 200, below 20, then we look out for sell opportunities. Okay, so now how do we know what is the right location to buy? I will tell you. So then you need to use the candlestick patterns. So for example, look at this. Here the 20 was crossing 200. This was a zone, right? Here you can see the price got wanting to close below 200, but it got rejected. It closed above that. So this is formed a bottoming tail bar here. And now how do we enter here? What is our criteria? Our criteria is whenever a bar, bottoming tail bar is forming like this in this particular location, your entry will be always above this bar. The moment price crosses above this bar, you're going to buy and you are going to put stop loss below this bar. It can be 5 points below this bar's low so that you can be safe. So if at all you go wrong, this stop loss will be triggered. If you go right, then you can ride this entire thing, keeping the 8 moving average as your trading stop loss. The moment 8 moving average is violated, you exit out of this trade. Simple. I hope you understand this concept. It's not a very complicated thing. It's a very simple concept which I'm trying to explain. Similarly, now the trend is established. It's an uptrend. Whenever the price comes below the 20 period moving average and gives you a hint like this, bottoming tail bar, you buy above this, put your stop loss here and keep trailing. So you have reached till here, this big bar has formed, then you put your stop loss here. Then again this has formed, is your RBI red bar ignored, then you put your stop loss here. Either you will take out entire profit here or the stop loss will trigger and you will exit out of here. So you will have taken the complete from here to here. Okay. So on a different time frame, this bottoming tail bar and topping tail bar will look something like this. That means if a 3-minute bar or say if a 10-minute bar is looking like this, if you go to a 5-minute chart, it will look like this. That means complete red bar is taken out by a green bar. So then it forms a bottoming tail bar like this. So use the same concept if you're trading there. Here also you can take an entry above here and put your stop loss here and trade it, trail it, and you're out of this trade. This is how you need to identify your trades. You don't have to apply too many indicators, just follow the price and do this. So my entire portfolio is built on this logic. You can build a beautiful portfolio using this on a higher time frame. If you see, this is on a daily chart. Okay, if I go to a weekly chart and try to identify stocks which are forming this kind of a candle, okay, how easy it is for me to invest. Just think, I will try to find out these kind of pin bars and then I will wait. If the price crosses above this, I will enter long. My stop loss is here. I don't have to put it in the system, I can put it in the mind. If it goes, candle closes below this, I will exit. Okay, that's the loss which I am ready to take. And if it doesn't trigger, I am going to hold it and ride it till the point my 8 moving average is not giving me an exit. Okay, again if I get an entry, I will take the entry and hold it. Right. So this is how you can invest. You can also use this concept in investing. I'm telling you, this strategy you can use it for any markets. The only problem you will face, the only problem anybody will face is the problem with discipline. You have to be so disciplined to always enter here, have your stop loss here, and do not get into panic mode if any bar is forming like this next day or it is forming like this, because you're not going to see this bar. You're going to see that this has broken, this is another red bar, tomorrow my stop loss will be hit and you cut your trade. This is what is the problem maximum traders fail to do. It's very simple thing, but it's very difficult to do. So what you need to do is you have to blindly follow your rule that, okay boss, I'm into this trade, stop loss hit, out, go find a next trade. And I'm telling you, out of 10 trades, even if you win 5 trades, since your risk to reward, you are risking this much and reward is this much, you will be in profits. So this is the most important thing which every trader should work on. This is how you have to trade. Risk to reward is the biggest secret which is known to everybody and nobody uses it. If you use risk to reward properly, you will be successful to trade like this in any market. And believe me, market will not give you everything in platter. It will never give you without a wiggle or hesitation. It will never go like from the point you buy, it will never go straight up like this. It will always go up like this, like this, like this, like this, like this, like this, and then it will go like this. It will never go straight like this. So you have to learn how to control your psychology, putting a stop loss here. You can go analyze any stock. I will tell you, this strategy will work for sure. See this. See this. See this. See this. See this. Your stop is here. You went long with 8. You exited here. You got into this trade. Stop is too long. Don't trade like this. You put a stop here also, and then you exit it. Stop is here, long 8, exited. So many trades you can do. Even on Banknifty, if I have to show you, you can trade it on a daily basis on Banknifty like this. Let's see on a 3-minute time frame. Let's keep the super trend away for some time so that you are not confused. Okay, just 20 and 200. See this bar? This high, about 20. You're putting a stop loss here. Ride it till up. Next day morning gapped up. So many points. This entire move you could have captured. Right? Same thing, reverse concept. Next day morning topping tail form bar. Sell it, stop loss above here. It came till here, but again it came down. It gave you profit. So trading is simple, guys, but we complicate it with our own psychology. Once you are in a trade, always wait for the outcome to come. Either it can be a stop loss or it can be a profit. And once you start getting profit, start trading it with your 8 period moving average. It is as simple as that. So I think this has become a long video this time. So I will cut it. Maybe next video, if you can follow, I will try to enhance more on this subject. But I tried to explain the markets in a very simple manner so that you can understand. I hope you like this video and share it with people who wants to start trading, and this can be your starting point for understanding the markets. So thank you so much for watching this video, guys, and please do subscribe and share. Leave your comments. I'm also planning to start training sessions, mentoring sessions for people who are interested to learn. I can dedicate my time and train you and mentor you, and every day we can have a discussion on the trades we have taken. So thank you so much for watching and have a great day.